All right, here we go. All right, Tuesday. Here's the market update. As of this video, I guess it's about, what, 3:30 New York time. The Dow is up 250 points. So, the rally continues, and I am not surprised. As I've been telling you, the underlying fundamentals, yesterday I talked about the monetary perfect storm that is coming together, which is this record amount of fiscal support, and now since, I guess, mid-October, early November, a re-acceleration in bank credit and all of the bank metrics. Very, very important. I mean, you would not see those banking metrics take off to the degree they have if the economy was weak. Remember, you need demand for credit to go up. The banks can't just jam credit down people's throats. There has to be demand for credit, and there has to be the ability to pay it back. A bank will evaluate a prospective borrower on his or her ability to pay it back, and that means having sufficient income and having the right amount of debt level. Like, you cannot have excessive amounts of debt, you won't get a loan. So conditions have to be good. If we see credit expanding as it has been since November, conditions have to be good. And of course, we got that really good jobs report, and I don't see anything in the fiscal flows whatsoever to indicate a slowdown, even since the government shutdown. And I've been monitoring that. Now remember, my information is real time. Nobody else comes close to that. Because I focus on the daily Treasury statement, which comes out every single day, we're talking about billions, tens of billions, hundreds of billions in flows between the government and the banking system on a daily basis. That's money going into somebody's account or being taken out of somebody's account. That is the most real-time data that you could possibly find. Everybody else is looking at stuff that's 30 days old, maybe 1 quarter old. I'm looking at real-time stuff. Makes a big difference. Nobody else is doing that. Just like I said, nobody else has MMT in an applied fashion. That is what I have fashioned here and put together with my 40 years of trading. Remember, I was a floor trader on 4 exchanges: NYMEX, CME, COMEX, New York Futures Exchange, in addition to a lot of other trading and money management activities and posts that I've had over the course of my career. So, things are looking good. Things are looking good. What I like also is there's still a level of skepticism. There's a level of fear. I see the headlines now. They're all talking about the China negotiations that are going on between the US and China, trade negotiations, and the media is ready to jump on a negative story. They're ready to jump on a negative story. Negative stories grab eyeballs. It gets viewers, and that is coin for these media companies. All right? It's not so much about reporting what's happening or having the right understanding of what's happening. It's just putting it out there. They got to put it out there. And the scarier it is, the more it's going to grab people's attentions. I see it. Like the slightest little setback in the market, and they're even intraday, and they're talking about, oh, the trade talks. Right away, the trade talk. They don't know what's going on, but right away, it's the trade talk. And I'll tell you this right now, no matter what happens with the trade talks, no matter what happens with the trade talks, if they fail, and of course if they fail, you know what the reaction is going to be. The market's going to go down. You're going to get another bout of selling. People are going to panic. They're going to dump stocks just like they did all in November and all in December. But the underlying conditions of the U.S. economy, look, at some point, the U.S. economy and the Chinese economy are going to decouple, if that's not already happening. It happened with Japan. I remember back in the 80s, U.S. and Japan were so linked. Japan was Japan Inc. We had U.S. executives going over to Japan. Lee Iacocca, the chairman of Chrysler, going over to Japan, checking out how they were doing things. Japan was the leader. Their economy was becoming larger than the U.S. And then what happened? Japan imploded. Did it bring the U.S. down? No, we kept on going. They decoupled. Same thing's going to happen here. Same thing's going to happen here. So I don't worry about that. I don't worry about that, and the sell-off or sell-offs that we have seen every time there's a tweet, every time there's a negative news report about the trade talks, it just creates a buying opportunity. The economy is strong. Now we might have to worry about this in the next fiscal year. I mean, the Democrats are talking about raising taxes. They just passed in their new rules the pay-go, which means for every increase, they got to find an offsetting revenue source, so that means taxes. Now the Republicans, to be fair, they had cut-go, which for them, it said for every spending increase, they had to cut something. But the thing was with the Republicans, they increased the spending and they didn't cut anything. So we have this you know, on steroids, this fiscal support on steroids right now. But the Democrats, they want to be this party of fiscal responsibility, which is crazy because that just undermines all the things they want to do, especially with the progressive Democrats, a lot of whom have been newly elected into office in Congress. Things like universal health care, things like free college tuition, infrastructure, all these things are going to be very hard to do if they have to be offset with cuts. And where are you going to cut? I mean, the biggest expenditures are in the non-discretionary things like Social Security, Medicare, Medicaid, and to a large extent, and even a lot of Democrats believe in this, it's the military. So there's not a lot after those four items, which comprise way more than half. All right, way more than half. You're talking probably around 2/3 of all spending in those four items right there. So there's not much to cut, but that's what they're talking about. I mean, they're talking about raising taxes as offsets. So we'll see what happens. We have time for that because we're not into the new budget yet. So yeah, everything looks positive. Now, I send out my emails throughout the day. Today talking about oil and the market. Of course, if you want to get a 30-day trial to my report, MMT Trader, please go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. See everybody tomorrow. Bye-bye.